Hello traders out there in Traderland, D7 here with Grok Trade, and the markets went up big last week and then sold off by week's end. Alright, we're going to look at the monthly charts first. Monthly charts first will tell us exactly the big picture, what's going on. We just wrapped up March, right? So I want to look at March and as a whole. So March, what was nice about March, this candlestick you see here is only a day into April, so that's day 1 of April. But anyway, the point here is March, last couple months, January, February, very bearish. March was bullish. We're looking at the S&P 500 Spider's ETF on the S&P 500. But if you look here, very bullish for the month, closing above the 20-month moving average. That's that blue line right there. If you look here at the diamond, same thing. Well, not the same thing. We did not close above the 20-day moving average. That is not good, but we do have a bullish candlestick. It's a bullish thrusting pattern that we see there. Nasdaq monthly chart, tweezer bottom, a thrusting pattern, and a hammer. We got 3 reversal patterns, same place. It's a reversal time, but we closed below the 20-month moving average, and that's where we're at right now for April. Small caps Russell's 2000. If you look here, we have a tweezer bottom. So the last couple months, you can see this. So if you look here, January is bearish, but February is actually bullish. March was bullish. You see this? So 2 bullish months instead of 1, like we're seeing across the board, and a little more bullish for the month for April than we're seeing on the other indices. Major support line on the monthly chart here, 20-day moving average coming down, acting as resistance. That's what that blue line is coming down here. A lot of support on the Fibonacci 38.2 mark. So we have to bounce off this. We need to go up. So financials, if you look here at the bank's monthly chart, we closed last month below the 20-day moving average. We barely had a bullish candlestick. And already this month, pretty bearish, guys, for the month. Okay, pretty bearish compared to what we're seeing elsewhere. So financials showing some relative weakness. Now, looking at the monthly chart, what needs to happen? I'm going to go back to the spiders and share this with you. We had the rising wedge, higher swing high, but we had a lower swing high on the MACD centered oscillator, lower swing high on the RSI and oscillator. Those 2 oscillators gave us bearish divergences, and sure enough, we dropped. When we broke that trend line right there, that was bad news, and sure enough, we dropped, but we're starting to find a bounce already. So I called the market high back here in January, saying chances are that's our top. We will not rally back up, making a new high. Let me share with you the chance. Here's the only chance it has. It needs to happen like really soon. For us to make a new all-time record high, opposed to going into a recessionary pullback in the markets, okay? This has to, starting April, and I think April and May have a really good chance of doing this, and it really needs to happen soon. We need to make a higher high than last month. So the spiders needs to go up above 462. Spider needs to get above that and stay above that. And then if May rallies higher and actually gets to this trend line, we will make a new high. And then chances are I will be saying that could be our high. I just think the odds are against that happening, but that is the only chance the markets have making a new time record high anytime in the next several years. Okay, here's the bull pullback. Here are the hammers, the reversal patterns, the tweezer bottoms. I'm not saying that this is a hammer, this is a tweezer bottom, but I just showed you a number of those on the monthly charts. This has to rally right now to stay bullish. If we show weakness and we go into a red month, April, that is just telling me we are much weaker than what I even thought we were going to be in the market. Much weaker. Very important month. We've got to see a white candlestick right there, or a green or white candlestick right here for April. We have to see that for the markets to stay solid, okay, for us to go up. If we go red here, that'd be a bull pullback failure, and we'll start basing sideways, making a what's called a low base, which is very bearish. Okay, so that's what we're looking at on big time frame. So I want to go to a weekly time frame, which is a shorter time frame, to see if we can get any idea of what might be happening soon in April. Here's the problem with a bullish April, guys. We had 3 bullish weeks, okay? Really nice run the last 3 weeks. I mean, March started off really, so anyway, if you look here, March, it was very bearish at the beginning, and then we went bullish. Then we sold off here at the top of this week. Now, the thing I want to share with you, so the week, well, the big thing here on the weekly chart is simply this. This last week, we had a lot of strength, but people sold into that strength and it came right back down. This is called a shooting star reversal pattern. A shooting star reversal pattern after an extended run to the upside. Okay, we had multiple, one candlestick, 2 candlestick, the 3rd candlestick went up, and sellers sold into it, down, and it gives you what looks like an inverted or an upside down hammer. It's called a shooting star. Very bearish, especially if we make a new lower low on this. So a new lower low, getting down below 449 on the spiders. So if we get down below 449 on the spiders, guys, that will probably likely for the week be our what's called a pivot candle, lower high, lower low. And that could be the start of a down leg. So the next couple weeks going into April could actually be bearish, not bullish. I was saying a couple videos ago, chances are we will have a bullish April and May. The chances are still in favor of that happening, but let me share with you why we may not see that. Because if this does turn out to be an up leg, and this does turn out on the weekly chart on the spiders, turns out to be a shooting star reversal pattern, and we do in fact start off this next week bearishly, okay? If it is a bearish week, pivot candle, look for follow through, and the only hope we have is that support line right there. And then we hope to bounce going into May, okay? The latter part of April going into May. So right now on the weekly, this is telling me we have a good chance of dropping, not going higher. So we should start off the month probably under pressure on the bear side. The diamonds, look at this, went up for the week, down. Shooting star reversal pattern, look for this to drop. Right now the bears have all the confidence, the bulls are losing confidence. Let's see what happens here. Now let's look at tech stocks. Here's the Nasdaq. Oh, sure enough, shooting star below a falling 20-week moving average after a nice rally to the upside. This has a great chance of dropping now. If it does get below 357, like the gun, 357, if you get below that and stays there, look for a pivot candle, look for follow through to the downside. Following the rest of this month could be really bearish, okay, on week to week. Small caps Russell's 2000 is kind of a shooting star. The reason it's not is because we have a big lower shadow also. This is basing sideways. Here's the only hope that markets have right now. Russell's 2000 is saying, hey, I'm basing sideways. It could be leading the charge to the upside, guys. This is saying that, do not pay too much attention to those rising or those shooting stars, because small caps are basing sideways. Look for the same to happen in the spiders, diamonds, and the Nasdaq Qs. So that's really interesting. The other thing that I look for are financials, the banks. What's going on with that? They look for opportunity. Well, banks are already selling off. You see this? This tells me that, holy smokes, there's no underlying strength to the markets on the weekly chart, because financials took such a hit last week that expect the rest of the markets to follow suit. Look for the markets to also start to drop. Now, the only benefit we have here is if the markets do drop and this drops, we have major support there. If the banks rally back up, we go into the symmetrical triangle and we come up to resistance and we break through the apex of this symmetrical triangle. If that happens, so let me say this again slowly. If this drops down bearishly, we hit support. That would be, week 2 or the very next week. The next week would be bullish. We hit our head at resistance, and then we plow through. That would be the best thing that could happen to the markets. That could happen. We're in the apex of a symmetrical triangle. Anything can happen. Look for a lot of chop going into this, but look for either a breakout to the downside, breakout to the upside. When it comes to financials, that's what the rest of the markets will do also. Okay, so now, quick look at the gold weekly. This is looking strong, big bullish pennant. We had a symmetrical triangle. We had a death hook here. We dropped down below and we rallied higher. We come up, bam, we got a nice bullish. Gold and silver look very bullish to me. Good opportunities here. Okay. Now, I want to go to the daily chart to see what's happening like right now. So what we saw already on the weekly charts are that we have shooting stars. It looks like it's going to drop. The weekly chart on the financials are also dropping. So it's telling us we probably have a good chance of next week being bearish. Okay, let's look at the daily charts. And that's these down here. And let me blow this dude up so we can see it. Let's take away the oscillators for this time being. I'm using TradingView. The links are down in the description. Let's see what's going to happen. Okay, so on a daily chart, we've already have a nice bull pullback, and now we have a hammer on the rising EMA. Guys, that's more bullish than is bearish. So that's telling me we have a good chance of rallying actually higher on the spiders. So the spiders could go up. That means if that's going to happen, that means we're not going to drop, or chances are not dropping on the weekly. That means we could base sideways here for a while on the larger time frames. Diamonds. Nice pullback. Look at this. People bought into that weakness, guys. Really, really powerful. We're in the apex of a triangle. Just got to be careful here. We're caught up in the moving averages. It's like it's a churning mess, a lot of turbulence. It's turbulent water, guys, in this environment. It can get really, really choppy. But what I do like is we had a nice rally to the upside. We have a nice pullback, and we have a hammer time. Look for that to rally up, and if it breaks through that trend line, bam, or boom, rather, to the upside. Look for a big, big run. So that would be good to see. Nasdaq. Nice pullback, nice hammer. Look for a rally to commence. And small caps, Russell 2000, already popping. We already had the pullback. It's already starting to pop. That's really, really good. But what's happening with financials on the daily? Down, 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 down. Now, guys, that's a bull pullback. It could still get bullish here. The thing I like to do is pull a fib and to look here. We're only at the 38. This thing could get down to the 50% Fibonacci before I'd be looking for a buy opportunity. So maybe Monday it starts off pretty bearishly, and then it rallies. Maybe that's what happens. So Monday gets bearish, and then we rally, and the rest of the market stay afloat and push higher. That could happen. Now, if the weekly falls out of bed and starts to drop, and this is actually going to go all the way down to this trend line, which it is going to want to. That trend line is a gravity point. That is, this price wants to get down there. Okay, this is on the financials. If we actually crash down there, look for next week to be really bearish if that happens. But here's the chance for the bulls to come in. These are nice pullbacks. We need to go. Thing I don't like about the pullbacks is pullbacks do not look symmetry. They look jagged on the sides of these candlesticks coming down. They are ugly pullbacks. I do not like ugly pullbacks. Do not like them. Do not like them. So that's what we're looking at on the as the markets. Gold caught up within this triangle. Look for a major move on gold. We're at the apex. It can't go any higher or any lower. Look at this. It's coiling between these lines. Wow. Look for this dude to pop or drop. Look for a big move, guys. Look for a big, big move. I think it's going to pop because what I'm seeing on the larger time frames. Silver is a nice bull flag. Nice bull flag taking place here. And that is, that's nice. That's nice. That's nice. So nice falling wedge bull type flag. Look, buy opportunity at this support, maybe add to that position on a breakout to the above on silver. So I'm liking what I'm seeing here in gold and silver. US dollar daily, US dollar is just melting up, guys, just melting higher. But look at all the churn that it's been. And the VIX I want to share with you on the daily chart, major support line bounce. We are below 20, guys, below 20. Are you kidding me? That's just unbelievable. Very, very good to see that we're doing, that the VIX is down that low. Matter of fact, I should do this, guys. I'm going to look at the weekly chart on VIX just to show you guys what we're seeing here. VIX is really low here. That is good. That's telling us that we have that there's no fear out there. We have a good chance for the bulls to come into the market, but we're pretty extended to the downside on the weekly chart. If you look here on the monthly chart, look at this. White, red, white, red, white. It's very, very choppy. What you're seeing here is one of the choppiest, most difficult markets you could ever be in. Anytime you have the VIX with no long legs, what we look for are big legs to the upside on the VIX or big legs to the downside on VIX. Anytime it's just choppy, caught up in the moving averages, that is playing havoc on the market's price action, and it is so hard to trade. So if I go over here to the I'm gonna go to the spiders here. I'm gonna go to the daily the daily chart on the spiders. I'm gonna zoom out a little bit. I just want to show you something. If you look here, we have been in this trading range going back to, this is middle of May 2021. So we've been getting to this low here, okay, to the high that we got January 2020. So since the middle of last year to where we're at today, which has been 1 year, we've been in this huge trading range between 410 and 480. 410 to 480, just a choppy mess. Because the hardest time to trade in the markets is anytime you're in a late stage bull market. So let's get talking here, guys. When's the hardest time to trade? I'm just telling you, I've been trading 23, 24 years, long time, over 2 decades using technical analysis. I lived through the technology bubble pop. I lived through the financial drop of 2008. I lived through many flash crashes, and not including the coronavirus, right? Or including the coronavirus crash. And so I know what I'm looking for. If you look here, you know what? I'll share this in a minute. But if you go to finviz.com, go to groups, look at those sector rotations. Anytime energy and materials get red hot, that is always a market top as far as sector rotation is concerned. That's what I see every time before a recessionary pullback takes place in the markets. We're seeing it now. And I don't want anybody to be confused by it. Everyone has their opinions, right? They're still very optimistic. Oh, we should still just keep going higher. We could go higher, but it'd be short-lived. A lot of times you'll get this late-stage rally where everyone says, see, we still got legs in this market. And you'll get this insane run to the upside because you'll get the short-selling squeezes taking place. And you got bulls and bears both buying the markets, and they're just screaming straight up. But that is the capitulation. That's what we see right before the major pullback in the markets. We haven't seen that major capitulation. We see huge volume in the markets right now, which is always a telltale to capitulation. So we have huge volume. We have energy, very expensive right now. Materials, very expensive right now. And we have inflation out of control. It's a runaway train. And our debt just screaming higher. U.S. debt deficit is getting bigger, not smaller. And the housing market is softening. It is starting to slow down. Last 4 months has just been plateaued. So everything, we have a lot of big time. I got a lot of big time. When I say big time, I'm talking in the billions, people in my sphere who are unloading tens of millions of dollars worth of real estate in the last 6 months. When I say that, I don't say that lightly. We're talking selling into now the billions on commercial real estate. They are selling it. So I'm just, because I know a lot of real estate guys here talking, or that listen to this. I'm just letting you know I have some big players in my sphere, and there's a lot of selling taking place. So anyway, the recessionary pullback is already happening. It's here. It's already. That's why we broke those trend lines. As soon as you break the trend lines, as soon as those trend lines get broken and you see sector rotation fall into place. When I say trend lines on the bigger time charts, the monthly trend lines have been broken. Because of that, we're done. That broke the back of this uptrend. So again, I just want everybody to hear what I'm saying. We are due for euphoria to come rushing in, where you get this insanely bullish run to the upside that was unexpected by everybody. When that happens, that will sucker in a bunch of amateurs. Okay, the bears will have their heads handed to them in that market. People will have FOMO, fear of missing out, and they will pile in. I promise you, we will be selling into that. We are begging for that to happen so we can sell into that. For any longs that we have, just yanking profits off the table and shorting that when we have the VIX so low, and taking great advantage of that huge volatility that will follow next. So some of the easiest money to be made is at the beginning of that new trend. So I'm looking, I think the high is already in. I'm waiting for this next rally to go up, maybe give us a double top in the markets, and then take its recessionary pullback. I'll share with you another thought that I might have. We are way overdue 12 years into this bull run. Do we have to have a recessionary pullback? The answer is yes, but it could look differently. What I mean by that is it going to be a traditional downtrend where the next 2 years it drops down? Well, maybe, because that's what it always does. But what if we had a recessionary pullback that was less a downtrend and more a long-term sideways trading range, where you have 2 years of chop just going sideways? That would be the bullish scenario money could buy, because that's a high base on the big time frame. High base gets really bullish, usually, more times than not, and you get another rally to the upside. The problem that we have, though, is inflation is trying its best to take care of the debt that we have accumulated. And that has to play out. And it's anybody's guess what's going to happen. But I'll tell you, I've said it in the past, hyperinflation can happen here in the U.S. I've been saying that almost 20 years. I had a guy in my trading club back in Indiana. He's passed on now, but he was my corporate attorney. And he's written a couple books. He ran for Senate in Indiana. And he says, Des, that's almost irresponsible of you to think that, or to be telling people that we could go into hyperinflation. And it doesn't seem like it could happen here, but I'm telling you, it doesn't matter what you think. Hyperinflation comes because of a dollar that has no value anymore. There's a war taking place with China and Russia they're thumbing their nose right now at the US dollar. They don't want the US dollar being seen as the world reserve. They want that day to be gone. If we lose the world reserve, we are in deep trouble. If we lose that status, woo. So what happens if we lose that status? What happens with confidence with everybody what happens with other countries buying our bonds? Do you see what I'm talking about? For those who are enthusiasts of the economic side of things, it's a bad picture. So anytime you have that much debt, when I look to a fundamental analysis, looking at my companies who I want to invest into, one thing I look at is their debt. How much debt do they have? I look at a lot of things. Cash flow, I look at a lot of things, okay? But debt's a big one because it's the monkey on the back. If they have an extreme amount of debt, they better have a good reason why they do. And if they don't, I lose confidence. I don't want to put my money there because the risk is higher. Countries are the same way. U.S. is, we've got those cards. We've been dealt these cards, and that's what we're playing with right now. I just wish we had more responsible politicians looking at their debt, looking at our deficit, and taking it seriously, more seriously than I think they are right now. I think they just keep ignoring it, thinking that everything's all right. Let's just keep going down the path we're going. It's a bad path. It's a bad path. We need more businessmen and women in politics, because businessmen and women understand what it takes to run a business, and the numbers have to always matter. I don't want a politician running for office, okay? I don't want another attorney running for office. I want businessmen and women who understand the structure of companies, how to work with people, how to service individuals, how to network, and how to play the game well. That's what we need. We need businessmen and women, because what we have now is not working. I didn't know I'd be talking about this. Anyway, soapbox. Let me share this with you. If you go to groktrade.com, we have a new chat room, a brand new chat room, and it's Zoom. You come on, you can turn on your camera, you can unmute yourself and talk, you can type in, and it's for traders. In the morning, it's for swing or day traders, and in the evening, it is for swing traders. It's at no cost, zero cost, no cost. It is free for 6 weeks, and then you can't even buy to get back in. Okay. It is for our Grok grads. For you Grok grads, if you haven't been, in my, in my recent webinar that we had with you guys, or my seen the emails, just know if you're a 301 or 401, you have access to this free of charge forever. So you have it for perpetuity, and we're allowing public to come in, have 6 weeks to come in, and enjoy, trade along with you guys, and. So that's it. So I'm taking my beautiful bride, Janelle, to Savannah, Georgia next week. Wow. Has anybody been to Savannah? I would like to know in your comments, where do you like, not a kid vacation, your spouse vacation? For the guys, where do you bring your women? For your women, where do you take your guys? And so I'm interested. Where do you like to go? Where is the romantic place you like to go? Let me know that. Savannah, Georgia. If you don't know what it is, research it a little bit. There's a very twisted movie called Midnight in the Garden of Good and Evil from 1997 that is Savannah, Georgia, and you get to see a lot of it. It's provocative. I didn't even watch it all, actually. Got halfway through it and said, I saw enough. But you get to see the beauty of Savannah and the charm that it has. It's almost like you're going back into time. You're in a different area, kind of upper scale. Like that a lot. So a lot of you guys are like, hey, I don't like your 5-minute videos. We want more substance. We want more meat on the bone. Guys, did I put enough meat on this bone? Did I overload you with... Did I entertain you? Did I give you the information and education that you were looking for? I hope so. I laid it all out on this one, 30-minute video. If you made it this far and you actually did make it, say made it in the comments. Only you and I and the others that made it will understand why you said made it. Tell me where you think is the best vacation to bring your significant other? Really interested to hear your thoughts. Best place, best place. Okay, that is it. Have a good one, guys, and we'll see you later. Bye.